onlinetaxupdate.com on a very important topic, recent judgment under GST. So the reason behind conducting this webinar, selecting the topic is that for every issues that we are facing in our day-to-day GST compliances, the solution are not there in the GST Act or even in notification or circular. So in those instances, we have to refer to the case laws where the similar issues have been discussed and ruling has been given. So that becomes our the source of finding the solution to our issues, and that's the reason. And our faculty today is Mohit Gupta sir, who will be taking us through the judgments. And thank you sir for coming and addressing our audience on this topic. A brief introduction about the sir is: sir is a practicing chartered accountant and lawyer. He is a co-opted member of Indirect Tax Committee of NIRC of ICI. He is involved in the transaction advisory practice, having rich experience of several years of working in top tier indirect taxation advisory firms of India, APRA and Associates, and Lakshmi Kumaran and Sridharan. He is two-time rank holder of CA Institute examination and has been actively involved in the various conventions and conference of ICA. He has been advising clients on a wider range of indirect tax matter, including GST, service tax, custom, foreign trade policy, PLI, and legal metrology law. He has worked with clients in various industries like real estate, infrastructure sector, iron and steel, automobile, consumer durable, FMCG, consumer electronics, startup, etc. He is also a GST trainer faculty of ICI. He has been giving several seminars, webinars on various platforms from past several years. He has also given various training sessions in corporates and trained various professionals. He has authored numerous books on various topics under GST, service tax, and VAT. So, welcome, sir, and over to you, sir. You please start the session.
Thank you so much, Ganeshan ji. So first of all, I would like to thank Mr. Ganeshan and Online Tax Update for giving me this wonderful opportunity. I think anytime I get to share my views, discuss my views rather, with our professional brothers and sisters, so that is always a very great opportunity. So thank you again, Mr. Ganeshan. So friends, without any further ado, I'll start the session. So I have shared my screen. Is it visible to everyone?
Yes, sir. It is visible.
So, my dear friends, see the importance why we have to discuss judgments, because GST law in itself is a complete code. Although we have GST Act, GST rules, GST notifications, but a lot of times, a lot of situations come for which there is no clear-cut provision, or there are provisions which contradict each other. So that is where judgments come in. And in GST, especially, the judgments become a very important aspect, because GST is not a new law as such, because a lot of provisions under GST, they have been copied, or they have been taken from service tax or excise regime. So not only the judgments in GST, but also the judgments which were there in service tax, excise, VAT, customs, even those judgments become very relevant in GST, in GST law. So whenever we are discussing any GST judgments, we also have to keep in mind that all the pre-GST regime judgments, a lot of those judgments can also be relevant when we are dealing with a case under GST. So this we will, so today's focus is recent judgments which are there in GST law. So we will be discussing some landmark judgments, and after that some other judgments which are on some significant issue. So issues which on ground level a lot of assessees are facing, a lot of professionals are facing. So on those kind of issues also, whatever judgments are there in favor of the assessee or against the assessee also, so those kind of judgments also we will discuss. And we will keep this a very interactive session. So any participants who has any doubt, they can ask those doubts then and there only. Only request I have is, because we will be doing this session judgment by judgment. So when I am discussing a judgment, so I'll first discuss that complete judgment. After I have completed my discussion on that judgment, then I'll take a pause. We'll take up any question or any questions of the participants which they might have, and then we will move on to the next judgment. So when I'm discussing the judgment, first please let me complete. After I've completed my discussion, then any participant can ask their questions. Mr. Ganeshan, I hope the audience can unmute themselves whenever they want.
Yes, yes. They can easily unmute themselves.
Okay, okay, perfect,
Yeah.
perfect.
Yes, yes.
So we'll start. So first judgment is Safari Retreats, given by Honorable Supreme Court in last year. I think as soon as I say Safari Retreats, I think a lot of participants are going to ask that this judgment got overturned by this budget amendment. So why is this judgment still relevant? So my dear friends, let me tell you that judgment is still relevant. So these this judgment gave two very important principles. So I'll briefly discuss both these principles, and then we'll discuss that what part of the judgment is now overridden by the budget amendment and what part of the judgment is still relevant. So before going to the judgment, we'll briefly go through the provisions. So we have section 17.5, which talks about block credit. Section 17.5C talks about works contract services when supplied for construction of immovable property other than plant and machinery. And then we have 17.5D, which talks about goods or services received by a taxable person for construction of immovable property other than plant or machinery on his own account. So both these services are blocked. So if you are receiving any of those services, you cannot avail the ITC. And then plant and machinery has been defined by in explanation to chapter 5 and 6 as any apparatus, equipment or machinery fixed to earth by foundation or structural support that are used for making outward supply of goods or services. And they have specifically excluded civil structure from the ambit of plant and machinery. So if you're constructing any building, any kind of civil structure, that is excluded from the ambit of plant and machinery. So what happened in the case of Safari Retreats? In this case, the assessee was constructing a mall for renting purposes. So all the shops which are there in the mall, so assessee wanted to rent out those shops to third parties. And assessee went to Odisha High Court. Odisha High Court took a favorable view. It granted ITC to the assessee on some other grounds. But when the matter finally reached the Supreme Court, so Supreme Court again gave in favor of the assessee, but on a very different ground. So what the Supreme Court observed that 17.5C and 17.5D, they both have different languages. So 17.5C uses the term plant and machinery, which talks about works contract service. Clause D talks about plant or machinery, which talks about all goods and services used in construction of immovable property. So court said that this is a very conscious choice done by the lawmakers because that has been there since model GST law. So first in May 16, model GST law came. Then in November 16, revised model GST law came. Then final draft came. Then final act came. So even before this final CDST act came, 2-3 iterations of this act were there available in the public domain for public comments. So court said that this is a very conscious decision by the government. This is not a mistake, and they also took a affidavit from government at that time saying that this difference in language is not a mistake. So basis that the court held that when you talk about plant and machinery, so CGST Act defines plant and machinery, which is apparatus, equipment, machinery fixed to earth by foundation, and which specifically excludes civil structure. But when you talk about plant or machinery, so then they are two different terms. One is plant, one is machinery. So they both are separate terms, and both these terms, plant as well as machinery, they both have not been defined in GST law. So then the court said that since they are not defined in GST law, we have for checking whether a particular construction, whether a particular material qualifies as a plant or not, we will have to go to functionality test. And functionality test basically has been developed in a lot of judgments under income tax law. Because under income tax, plant is a very well defined term because they have separate depreciation rate, they have separate depreciation provisions, they have different capitalization provisions. So under income tax, plant is a very well defined term. So there are a lot many judgments under income tax which defines what is plant, what is not plant. So under income tax, they have developed this test called functionality test. So basically what they have defined in income tax is if any structure is essential to the business operation, it can be considered as a plant. So going by the same logic, Supreme Court held that even if it is a building, but it qualifies the definition of plant as is held by various judgments under income tax law, then also the credit will be eligible irrespective of whether it is a building or not. So they did not discuss whether the mall will be a plant in this case. For that limited matter, they remanded back the matter to Odisha High Court. to check whether the mall will qualify as a plant or not, but they gave the broad principle that whatever principles were there in income tax law, the same will apply. So this ground I will not discuss in too much detail because this in budget 2025 they have amended this definition. So instead of plant or machinery, they have now amended it to plant and machinery from retrospective effect from 1st July 2017. So now from day one of so that amendment is still not notified, but as soon as it is notified, it will be operational from day one of GST. So as soon as that amendment comes, all the discussion we have had till now, that discussion will become completely redundant. But now next question comes, then what is the relevance of the judgment after this amendment? What is the relevance of the judgment? So for that, we also have to look at second important principle, which was given by the Supreme Court. So apart from this, Supreme Court also focused on one other phrase in section 17.5D, which is on his own account. So if you can see the language, goods or services are both received by a taxable person for construction of an immovable property other than plant and machinery on his own account, including when such goods or services are used in course of furtherance of business. So in para 32 of the judgment, Supreme Court has said that on his own account should be read in such a way that only when a assessee is using the building for his own use. So that also means personal use, that also means business use. So let us say I am a chartered accountant. I construct a building wherein my employees will sit. I will run my firm from that particular building. So my employees will sit, they will use the building, I will use the building, and we will give the services. So in that case also, we as a firm are using that building. So that use can be said to be on his own account. But in case a mall is given for renting, so in that case, the property is ultimately used by some other third party. So that cannot be said to be covered in the term on his own account. So in that case, if any kind of construction is being done and that construction is ultimately used by some other third party and not used by the person who is constructing that building. So in that case, we can say that that construction is not on its own account and it will get excluded from section 17.5D. So once it is excluded from 17.5D, that credit will become eligible. So even though the first ground, plant or machinery, has been amended by the Finance Act 2025, but the phrase on his own account is still there in section 17.5D. So I personally believe that using this argument also, if any, in any of these cases where goods or services are used, so first of all, we have to keep in mind, section 17.5C talks about works contract service, section 17.5D talks about goods or services. So if any person is taking any works contract services, he will get covered in 17.5C and he will not be able to get credit because in 17.5C, the language is very clear. Your output supply has to be of works contract service, otherwise you will not get the credit. But if we come to section 17.5D, so for any goods or services other than works contract service, if a person is taking those goods or services and he is constructing a movable property and that property will be used by some other third party. So that will be either given on rent, that will be given on lease or some other kind of arrangement where that property is ultimately used by a third party. In that case, the assessor can very well take this argument that the construction is not on its own account and therefore credit should be eligible because it is not covered in section 17.5D. And even a review petition was filed against this judgment in Honorable Supreme Court itself. But in the review petition also, Supreme Court upheld the original judgment passed by it. So there is no change in the judgment. So that was our first judgment. If any participant has any query regarding that judgment, they can discuss.
What if I construct a hotel for providing room renting services? Then in that case, whether this ITC shall be allowed to me?
Yes, so Sagarji, on his own account, because the Supreme Court also discussed that only in a para 32. So they also did not go into much detail, but I believe they can take the credit because
Okay,
ultimately the property is used by a third party.
third party. That's my view also. Thank you.
Gandhi ji has asked, what if client is engaged in only renting of property? So then also they can take credit, because that was exactly the case in Safari Retreat. That was a mall who was renting the shops. So that case will be covered in this ground, and they can take the ITC.
Neelakantan sir is asking, been or more losses to the assessee, sir.
Sorry,
I,
Ganesh, come again.
yeah, yeah. Sir is saying that been or means plant or machinery, plant and machinery. I think he's referring to or more losses to the assessee.
So
Neelakantan sir, if you can ask the question, it would be more understandable. Neelakantan sir, you can ask your query, sir.
Yes, sir. Yes, sir. The same thing.
Yeah.
What you interpreted is right, sir. That I'm asking for.
okay. So again, post amendment, now that plant and machinery, plant house machinery, that discussion is now over. Now we only have to look at the on his own account ground. Which I think Manjul ji has raised his hand.
So my question
Manjul
was,
Mishra,
again,
yeah.
yeah. So my question was again the same. What would be the eligibility after this amendment when the word "or" is changed with the "and"? So would be the eligibility would remain the same as it is now, or it might be the different?
So Manjul ji, now only when you are purchasing any goods or service other than works contract service, and that is used for construction of an immovable property, which is ultimately used by a third party, which is not used by the assessor himself. In that case, that it can be availed, otherwise it cannot be availed. But we have to understand, because immovable property, plant and machinery, every term is a discussion in itself. So whenever in a particular case we are talking about availing any ITC, each and every term we have to discuss that what is immovable property, what is movable property, what is plant and machinery. So each and every term we have to discuss and see in very detail.
Okay, Gopal sir is asking, so own account does not mean using for business into bracket renting.
No, so because see, own account only means when the assessee is using the building himself. In renting, that property is given to a third person who is using the building. So that has to be the deciding criteria, which is laid down by the Honorable Supreme Court.
Okay. Okay, Grandi Harish, CA Grandi Harish is saying, very good afternoon, sir. Can you share how we can update latest judgment? So many states, so many cases. So please guide me.
So I think that we can discuss after the session, sir. I think I would request all the participants that during the session we should stick to the judgment which we are discussing. Any queries if the participant have not related to the topic, that I'll take after the session.
Great. So any further query from participant, or we can move to next judgment? Use the chat box, sir. Participants, you can use the chat box to reply, or you can
We
speak
can.
as well. Can two developers reciprocate the building for rent to claim ITC?
Yes, sir. So if they are not selling the building, they are renting it out to each other, they can avail the ITC.
Fine. Gopal sir is asking, what if client is making warehouse for renting out, so we can claim ITC on this?
Warehouse would be a bit difficult, because in warehouse you are not giving the right over the space. In warehouse, you are using the property yourself, but you are telling the client that, okay, you come with your goods and we can store your goods in this place. So in that case, I think it would be a 50-50 chance. So that is something which is in a gray area. So it is possible to argue, but the chances of success are 50-50. Again, because
Okay.
this principle is not discussed in detail by Supreme Court. So we have to be very careful when we are taking this argument, because I think when these kind of cases go to Supreme Court, then we will have some more detailed.
Okay. Ashok sir is asking, if property is purchased by paying GST for giving on renting, can we claim GST?
So if you purchase a property, if you purchase a completed property, there is no GST. If you purchase a under construction property, then that will be covered in works contract service, because that HSN code for that is 9954. So that will get covered in section 17.5C. So only when you are purchasing any goods or services other than works contract service, only then you will go to section 17.5D. So that has to be especially taken care of when we are structuring any such kind of transaction.
Okay. Oh, Aniruddha sir is asking, what difference does it make by replacing the word or and from and?
I can go into that discussion, but after post amendment, now that complete discussion has become irrelevant. So that is
Okay.
a pure discussion for the sake of discussion. So if you want, we can discuss one-to-one after the session is over. But I think for the benefit of all, I would request that we keep this discussion separate.
Right. Yes. So any further? No. Okay. No further query. Okay, sir. We can move to next. I think no.
So
Yeah.
moving on to the next judgment. So again, this is a very, very important judgment, Radhika Agarwal of Supreme Court. So this is regarding arrest. I think arrest is one such area wherein the law has become very, very complicated, especially in past 10-15 years. Because in past 10-15 years, the department, whether it is customs, whether it is GST, they have become very active in doing arrest, or at least threatening to arrest. In the guise of threatening to arrest, they also coerce, in a lot of cases we have seen that they also coerce the assessee in making arbitrary tax payments. So a lot of different judgments, contradicting judgments were there. So this judgment of Radhika Agarwal, it has led to rest a lot of those controversies. So I would not say all the issues related to arrest has been discussed, but a lot many critical issues have been discussed and settled by this judgment of Radhika Agarwal. So under GST, the limit for arrest for non-bailable offences is 5 crores. Under customs, it is 50 lakhs. The principle which has been affirmed by Supreme Court. So these principles were earlier also there, but those have been reaffirmed, that the arrest has to be based on credible material, that has to comply with constitutional safeguards. So what is constitutional safeguards? That we will discuss later. Then important challenge which was made to the which was made in the Honorable Supreme Court was that GST is a taxation law. So under taxation law, Parliament cannot have power to arrest, power to prosecute, because that is a separate power. So they should be given in CRPC, Criminal Procedure Code, but they cannot be given in a taxation law. So for that, the court has given ruling in favor of the department, saying that the power to collect tax also include the power to enforce collection of tax, and that includes the provisions of arrest, provisions of prosecution. So all these provisions are included implicitly in that power. So these provisions are constitutionally valid. There is no issue in that. Then section 69 and 70, they do not violate constitutional principle as it is within the doctrine of pith and substance. So that was the first major question which was given in favor of the department. But now when it comes to safeguard, so very, very important reasoning, one very important principle given the Supreme Court. So before this Supreme Court judgment, there was a very well accepted law that reasons to believe. So under section 69, the officer should have reasons to believe that any tax has been evaded, and offenses given in section 132 subsection 1 clause A to D, one of those offenses has been committed, the amount is above 5 CR, that makes it an non-billable offense. So officers should have reasons to believe that such an offense has been committed, only then they can go for the arrest. So before this judgment, that was a very well accepted principle, that those reasons to believe need not be given to the assessee. So assessee has to be given the grounds of arrest, but he does not has to be given the reasons to believe. Now, what is the difference between these two? So I'll take an example. So let's say GST department is there, then there is a assessee Mohit Gupta, then there is some third assessee who is jealous of Mohit Gupta. So that third person, he went to the department, he gave a complaint to the department that I think that Mohit Gupta has done so and so tax evasion, he is engaged in so and so behavior, and I think he has done tax evasion. So department got that complaint, and basis that complaint, department did his investigation. They conducted search proceedings in my office, in my factory. They conducted some other proceedings. They conducted some test purchase. So whatever they wanted to do, they did their investigation, and then they arrested. At the time of arrest, they gave the grounds of arrest. So what is the difference between these two terms now? Reasons to believe. So reason to believe is the initial reason to believe, which department got to know because of that department started the proceeding. So reason to believe is that they got a complaint from a third party. Basis that they did so, and they did a search proceeding, they did a test purchase. So those become part of reasons to believe. What is grounds of arrest? Grounds of arrest is the conclusion. So let's say after all this investigation, department came to the conclusion that invoices has been issued without any underlying supply of goods. So in short, bogus invoices has been issued. So in grounds of arrest, the department will only mention that the assessee has done bogus billing for so and so amount, which is one of the offenses given in section 152 1A to D. So he is liable for arrest under section 69. So ground of arrest is very, very short, and that is the conclusion. But reasons to believe is the initial reason which the department has gotten. And in a lot of cases, that reason to believe can be a very important safeguard for the assessee. If the assessee knows the reason to believe, that gives very important information to the assessee to defend itself. So before this judgment, that was a very well accepted principle that grounds of arrest has to be informed, but reasons to believe does not need to be communicated to the assessee. Assessee can challenge those reasons to believe in a court of law, and the court can ask the department to reproduce those reasons to believe. So those reasons to believe has to be in writing, but only the court of law can ask those reasons from the department. But in this judgment, what the Supreme Court said, so Supreme Court referred to the judgment of Arvind Kejriwal, which was given in the context of PMLA, Prevention of Money Laundering Act. So in that act, in that judgment, Supreme Court said that the reasons to believe has to be given to the assessee, not just grounds of arrest. Reasons to believe also has to be given. Following that judgment, in Radhika Agarwal, the Supreme Court held that the provisions for arrest in PMLA and GST Act and Customs Act, those provisions are almost similar. So all the principles, all the decision which is given by Supreme Court in the case of Arvind Kejriwal, they will squarely apply to GST and customs law as well. So therefore, reasons to believe now also has to be given to the assessee. So now coming from a practical side, so whenever any department is threatening any arrest, or when they actually arrest the assessee, so first thing the assessee has to do is the assessee has to ask for ground of arrest, although ground of arrest has to be given to assessee before making the arrest. And after the arrest has been made, the assessee, first thing he has to do is to write a letter and ask for the reasons to believe to the department. If reasons to believe is not given by the department, believe me, there is a very, very good chance that assessee will get bail. And that was a recent case. So after the judgment of Radhika Agarwal, there was a case of Varun Goyal in Guwahati High Court. So in that case, the department did not give reasons to believe to the assessee. So considering that ground, that reasons to believe have not been provided to the assessee, as well as some one or two other factors, Guwahati High Court held that since proper procedure has not been followed, the assessee has to be released on interim bail. So now that is a very, very good defense available to the assessee, which as professionals we should keep in mind. Then another principle is courts should normally in a arrest proceedings, court do not go into the subjectivity of the officer's decision. They only go into the judicial review. That on the face of it, prima facie, if it appears that the arrest is correct, then court will not go into the reasoning that whether the officer's reason was very valid, whether someone could have released the assessee. So all these questions usually courts, high courts do not go into. They only check whether prima facie the arrest is correct, whether any constitutional or statutory provision has been violated. If that is not violated, then courts usually do not intervene. So that has been reaffirmed in this judgment also. Then the arrested person has the right to meet an advocate during interrogation, but only within visual distance, not hearing distance. So that is to make sure that advocate can see that the department is not harassing the assessee, but the advocate cannot help the assessee in answering the questions of the department. Then CBIC Instruction 2 by 2223 was issued by CBIC. So that was a very, very good instruction that provided a lot of safeguards to the assessee. Like biggest safeguard they gave was that justification for arrest. So they said that only because a offense is covered in section 132 1A to D, that is not the sole reason which should be there for arrest. For arrest, you have to go beyond the legal prerequisites. So if there is a genuine threat that SSC can flee the city, it can tamper with the evidence, that can tamper with the witnesses, they can threaten the witnesses. So if there is a risk to the investigation by the SSC, only in those cases the department should go for the arrest. Otherwise, the department should not go for the arrest. So that was given in CBIC instruction. The court has endorsed those instructions and said that those principles are required to be followed by the department. So even if they were not given an instruction, those principles are very important and they have to be followed by the department officer. Then no mandatory adjudication. Again, that is a very, very important principle. So now all these points which I am discussing. So on almost each and every point, there was a history of judgments. So some judgments were against, some judgments were in favor, or some judgments were not very clear. So on each and every point, now the courts have given this Radhika Agarwal case, Supreme Court has given very decisive judgment. So that what makes this judgment very, very important. So no mandatory adjudication or assessment. So this issue arose from the judgment of Make My Trip given by Delhi High Court way back in 2016, and then which was affirmed in Supreme Court. So in Make My Trip judgment, the Delhi High Court held that, because for arresting the SSC, the department has to satisfy the criteria for amount, that it has to be above 5 CR, or in service tax, the limit used to be different. So it has to be above that limit. So SSC took a ground in Make My Trip that for clarifying the amount, for to be sure that the offense committed exceed that amount, first adjudication has to be done. So show cause notice has to be passed, show cause notice has to be adjudicated. Until and unless that adjudication is done, the department cannot know for sure that that offense has been committed and that exceeds the monetary limit. So without adjudication, arrest is not possible. And Supreme Court, High Court held in favor of the SSC. Supreme Court affirmed the judgment. Then we have some judgment of Telangana High Court, Madras High Court, which was against the SSC. That adjudication is not necessary if the department has good reasons to believe that the offense has been committed and the amount is more than the limit defined, then they can go for the arrest. So those two set of judgments were there on this particular point. Now the Supreme Court has given this point in favor of the department that adjudication is not required if only the condition under section 69 has to be fulfilled. So if department has reasons to believe based on some credible material which they are required to give to the SSC on request also that offense has been committed in the 132 1A to D, then they can go for the arrest without going for adjudication or assessment order. Then we were talking about under the guise of arrest, department in a lot of cases they threaten the SSC and forcefully make them pay some GST amount. So on that, the court has given very, very strict verdict that tax recovery needs adjudication. So all these proceedings for arrest, so arrest proceeding should be separate, tax payment should be separate. So department cannot use the threat of arrest to make the SSC pay some tax amount. So tax amount should be paid only after the adjudication has been done. But practically speaking, this is a very good principle given by the Supreme Court that has also been given earlier also. But how practically this is enforced, that becomes very important, because this is one of those cases where practical enforcement is more important than the provision. Because practically, I'll tell you, we have seen a lot of cases where if the department is entering a premises for their search proceedings and there is CCTV camera in the facility of the SSC, first thing they do is they disconnect the CCTV. There is no law wherein they are required to do so, or wherein they have the right to do so. Because whatever proceedings they want to do, those are lawful proceedings. So if that is recorded in a CCTV, that is not illegal. But department, for whatever reasons best known to them, whenever they go into a premises, first thing they do is disconnect the CCTV. So those kind of practices has to be curbed if we actually want to enforce this principle. So that is something on which, on practical side, central government, state government, and CBIC has to work, because only in a court of law giving these kind of legal principles is not sufficient for the assessees. Then, and the last important guideline, so we were discussing that all the constitutional safeguards has to be there. So for this, we have a very landmark judgment of DK Basu. So in DK Basu judgments, they have given various safeguards. So like informing grounds of arrest, maintaining records. So every officer has to maintain a case diary, which has to be serial numbered. So that basically eliminates any possibility of backdating of records. So in that diary, officer has to mention each and everything, that on this date these proceedings took place, on this date these proceedings took place. So that is to basically create a record, independent record. So in case of any scrutiny, all the official summons, etc., can be cross-checked with this diary. So all these safeguards are discussed in the judgment of DK Basu. So Radhika Agarwal has basically held that all the principles, safeguards which are given in DK Basu, those safeguards has to be followed in arrest under GST and customs also. And if those safeguards are not followed, then that arrest becomes null and void. Because any procedure which is required to be followed during arrest, those are not just procedural requirements, those are very important substantive requirements. So if those requirements, those procedures are not followed, then the arrest itself becomes null and void. So that was the judgment of Radhika Agarwal. If any participant has any doubt related to that.
So what is the general timeline? Suppose if somebody is coming and arresting at late evening, 8, 9, 8 p.m., 9 p.m., is it allowed, or only during the daytime that has to be done, means arrest procedures?
So there is no written law regarding this, but usually that is done during normal office timings.
As like the search and the search what is happening, that happens even at late night.
Search can happen anytime. For search, there is no specific defined times. So search can happen anytime.
Okay. Balaram sir is asking the monetary limit is for a particular financial year or more than 1 year.
So Balaramji, that is not given in GST law. So we have to take it as complete limit throughout the year. So even if there are 4 years involved, so sum total of all the years has to be taken. That is how department takes it.
What is the time limit to launch prosecution? Sandeep sir is asking.
Sandeepji, again, this time limit has not been defined in GST law, so we have to go by the same time limits given under section 74. So 5 years from the due date to file annual return. I think.
Any query from participants? Yes, Ridhima is asking. Sir, the law of CRPC for arrest will not apply in case of arrest made under GST law.
So, Radhimaji, they have given a specific provision under GST that all the principles which apply to judicial proceedings, those same for under CRPC, those same principles will apply under GST law. So, wherever GST law has a different provision, that provision will apply. But if the GST law is silent on all the procedural aspects, CRPC will apply.
Okay. Whether the ITC includes output tax.
So ITC is a different thing, output tax is a different thing. They both are completely different terms.
Pramod ji is asking, power of to collect tax also give power to enforce collection. So why reason to believe is required?
So that is the entitlement of the government. Now, after they have that right, they have themselves imposed a restriction that only when the officer has reason to believe they will arrest. Otherwise, they will go and start arresting everyone. They have to put some safeguards in the GST law.
Reason to believe only when there is a evasion, reason of evading the tax. Maybe we can interpret that way, right?
And that also those specific 4 kind of evasion. So not just any evasion. those four specific offences which are given in 132(1)(a) to D. So those are basically issuing bogus invoice, availing ITC on bogus invoice, issuing goods without any invoice, or collecting amount in the name of GST but not depositing to the government. So only these four specific cases, the department can go for the arrest.
Okay. Balaram sir is putting his question again, whether the input tax credit include output tax for the purpose of computing monetary limit of 5 crore or so. Whether
So,
both output tax and input tax, both the will be included.
so Balaramji, input tax, output tax, they both are given in separate clauses. So there is one clause which talks about issuing bogus invoice, another clause which talks about availing ITC on bogus invoice. So every clause is different, but if the sum total of those clauses, so let us say some person fraudulently availed 3 crore ITC, fraudulently issued 3.5 crore invoices involving 3.5 crore output tax. So then both amounts will be added by the department to compute the limit of 5 crores.
So that is an instance, I think. So in one instance, if they believe the both are only they want to cater to ITC, they will only consider ITC department.
Yes.
Okay, Pramod ji. Okay, Ramesh ji is asking supplier passed on bogus ITC buyer. Bogus ITC or bogus, I think. Supplier passed on bogus ITC buyer can avail ITC and issue invoice to end user, and he availed the ITC. In this case, who is punishable, middle person or end person?
So both are punishable. The way GST law is drafted, both the persons are punishable.
Right, that is fair.
So, Ganeshan, till when we have the time, because I think the quantum of queries by the participants is also a lot.
Yeah,
So,
yeah.
I think we have to manage the time accordingly. So, till when we have the time for the session?
We have actually till 4:15. 15 minutes for query session that we normally keep, but since query is included here, so we can go by go up to 4:15.
Okay.
Yeah.
Okay. So let us do one thing now. For the next judgments, I'll take the judgments first, and then all the queries we can take up in the last.
Fine, sir. It is fine. Yeah.
Okay. So
Yeah.
next judgment is Indian Medical Association. This is
So
given by
yeah, participant can still pose their query, pose the judgment is interpreted, so that your queries are already came in the chat box.
so we'll take those queries up at the end, but any
Hmm.
participants can send the queries as and when they want to.
Yeah.
So next case is Indian Medical Association given by Kerala High Court. So although it is a High Court judgment, not a Supreme Court judgment, but still to me it is a very, very important judgment because it talks about a very important concept in GST, that is mutuality concept. So I'll not go into much detail in this judgment because again it is a High Court judgment. It is bound to go to Supreme Court. So then we'll have a more detailed judgment. But the brief issue which went to High Court in this case is Indian Medical Association is basically association of doctors. So some doctors came together, they formed this association, and what they do is any member, any doctor which wants to become a member, they can pay some one-time fees to become a member, then they have to pay some fixed monthly fees. And then the benefits they get are in the form of if any doctor dies, then some benefit is given to the family of that doctor. If any doctor is disabled, then some amount is given to that doctor. So those kind of benefits are there for the members of the organization. So the issue which arose is whether the subscription money, which is one-time subscription or the monthly subscription, which is given by the members of the association to the association, whether that is taxable or not, and whether that is covered in the principle of mutuality, especially after the retrospective amendment in section 7(1) AA of CDST and state GST acts. So going into a little bit of history, in Calcutta Club, we had a judgment of Calcutta Club in 2019, which held that concept of mutuality. So what is the concept of mutuality? The concept of mutuality basically says that in this case only, if we take an example, that Indian Medical Association So association is only a group of people who have come together for some self-serving purposes. So for serving some purposes pertaining to each and every group member, not for doing some business with the outside party. So in that case, the association does not have any distinct entity from the group of members. So there cannot be any service from association to members or vice versa, because there are no two persons. For a service to be there, there has to be two persons. So that is the basic concept of mutuality. In the judgment of Calcutta Club in 2019, given by Honorable Supreme Court held that mutuality concept survives even after the 46th constitutional amendment. So again, I'm not going into too much detail into the history, because the history of mutuality concept is one of the most complex history you will ever find in a taxation matter. So Calcutta Club judgment basically held that even after the 46th constitutional amendment, the concept of mutuality survives, and under GST that concept is still relevant. So in case of all these kind of associations, clubs, the concept of mutuality will apply and there will be no GST. So that was the basic principle held down in Calcutta Club. After that, to override this judgment, government came out with amendment in section 217E and section 71AA, wherein basically they introduced the explanation from retrospective effect from day one of GST, saying that we are deeming that these are two distinct persons, the association clubs and its members, and any service between them will be taxable. So that judgment was retrospectively made from 1st July 2017. So in the judgment of Indian Medical Association, what the Kerala High Court has now held is, even after this amendment, because usually when we talk about any definition, we either have to refer to the statute under which the definition is used. If there is no definition, then we have to go to general meaning, common parlance of those words, or maybe General Clauses Act. But when the words pertain to a constitutional issue, then only the definitions given in constitution has to be referred to. So basically what the Kerala High Court said is the concept of mutuality, the definition of service. So they said that as per basic definition of service, there has to be at least two persons. For goods, there can be one person, but for service, there has to be two persons. And the deeming fiction, which was introduced in section 71AA by the government in CGST Act, that deeming fiction is not there in constitution, and without any deeming fiction being there in constitution, we will go to the normal meaning of service, normal meaning of supply, for which there has to be two persons. And even after this amendment, GST cannot be levied on services from association to its member, as long as there is no amendment made in the constitution. So before any such amendment, taxability of such services is not possible. So that was the first important principle. Second important principle is court held that retrospective application of any these kind of amendments is not possible, especially in indirect tax law, because in indirect tax law, the assessee is supposed to collect the tax from the customers. So in indirect tax law, when you introduce a retrospective levy, then the clubs or the associations, they will not be in a position to collect GST from the members for the past dues. So even the retrospective application of these amendment is not in line with the Constitution of India. So those are the two very, very important principles. But again, this being a High Court judgment, it is bound to go to Supreme Court. So once we go to Supreme Court, once the judgment of Supreme Court comes, we will have more clarity. But I think this is a very important judgment which every assessor should be aware of if they are dealing with any such related services. And I think this same concept will also apply to cross charge, because ever since ISD has been made applicable from April 2025, a very big dispute of ISD versus cross charge has also come into picture. So I believe that the same logic which the court has applied, same logic will apply to cross charge also, because effectively there is only a single entity in cross charge. So different GST registrations within same PAN. If there is one HO who is giving some support activities to all the other branches. So I think same logic will apply in that case also, that there are no two persons, and unless and until any proper amendment is made in Constitution, just by giving a deeming fiction under GST law, they cannot impose tax on a transaction which is only done within a single assessee. So same argument can be taken for cross charge as well. Then second, next is judgment of Patanjali Ayurved given by Allahabad High Court. So in this case, what happened is the assessee DGGI issued a SCN. They alleged that the assessee is a bogus assessee. All the purchases are fake, all the sales are fake. So there is circular 169, if I remember the number correctly. So that circular basically says if the purchase as well as sale of a assessee is fake. So the ITC availed is fake, which the assessee has to pay back, and the output tax paid on the output supply, that is excess paid by the assessee because there was no supply, so there was no GST payable. So that circular basically said that. So let us say that there is an assessee ABC. He made some fake purchase of 100 rupees. He did some fake sales of 110 rupees. So they said that the ITC on 100 rupees is invalid, which has to be paid back. Tax paid on 110 rupees of sale is excess paid tax. So they basically said that they can get set off. 100 rupees ITC with 110 rupees liability, they will get set off. There will be no tax liability, but penalty of 100% under section 122 will be levied on both the transactions. So penalty of 100 rupees equivalent to ITC availed plus penalty of 110 rupees equivalent to bogus invoice issued. So penalty equivalent to 100% of tax will be levied in both the cases. So assessee went to the High Court on the ground that, so first of all, when there is no tax payment, so in this case, department directly issued a notice for penalty under section 122 without raising any tax demand under section 74 following the circular. So assessee went to the court and said that section 122 cannot be invoked unless and until section 74 is invoked, because section 74 is the tax main section for the adjudication for giving the show cause notice. So unless and until 74 is invoked, 122 cannot be invoked directly. So without any demand for tax, independent demand of penalty cannot be there. That was the basic contention of the assessee, which has been rejected by the court. So court has said that both the sections 74 and 122 are independent sections, and even if 74 is not invoked, section 122 cannot be can be invoked directly to impose penalty. And second ground was that is not a very important ground. The assessor said that the title of section 122 is offenses, so any notice should be issued in accordance to provisions of CRPC. So court said that section 122 is a independent provision. If the conditions of 122 are satisfied, it can be invoked. So again, that is not a very major ground, but the basic ground, the important ratio is section 122 and 74 are independent sections. So even if there is no tax demands, department can still directly invoke section 122. Then again, this is a very, very important judgment given by Allahabad High Court in the case of RT Infotech. So in this case, what happened is the purchasing dealer, RT Infotech. So RT Infotech was the customer. They purchased some services from Airtel, Bharti Airtel Limited. And department came with this allegation that Bharti Airtel has not deposited the tax. So RT Infotech has to pay that amount, referring to section 16(2)(c) of the CDST Act. So in this case, Allahabad High Court held that the buyer has no control over the seller. So once the buyer has made a GST payment to the seller, and there is no connivance, there is no fraud, there is no connivance between the buyer and the seller. That is a bona fide purchase, and buyer has made payment to the seller. After that, if seller does not deposit tax to the buyer, seller does not deposit tax to the government, buyer cannot be penalized. The department has to make the tax recovery from the seller. So on this ground, they quashed the proceeding against the assessee. So same same principle, landmark judgment was given in the case of Arise India Limited by Delhi High Court in context of Delhi VAT. So Delhi VAT also have very similar provisions given in section 16(2)(c). So they also have very similar provisions. So in context of those Delhi VAT provisions, Arise India Limited, Delhi High Court held that as long as the statement matches, so that means that it is reflected in GSTR 2A of the assessee. So as long as the statement is matching and there is no malified intention, then the ITC of buyer cannot be disallowed. And then that judgment was also affirmed by Honorable Supreme Court in the case of on-quest merchandising. So same principle has been followed by Allahabad High Court, I think, and that is a very, very important judgment because nowadays different grounds is taken by the department for denial of the ITC. Either they will say that the ITC is not reflecting in 2A, or even if it is reflecting in 2A, the tax is not paid by the seller. If it is paid by the seller, then the registration of seller was retrospectively cancelled, so you're not eligible for ITC. So many different grounds department is taking for denial of ITC. So it is very important to keep track of each and every judgment. So each and every type of issue which is raised by the department and each and every type of judgment which is there on that particular point. So that is going to be very, very important for the professionals when they want to defend this case before the higher authorities. The next case is Dott Services Limited. So in this, this is an important case in multiple parallel proceedings. So the Telangana High Court basically held that when central authorities already issued a notice, already issued DRC 7 on the particular matter. On same matter, Telangana state authorities again issued the DRC 7. So Telangana state authorities were not aware of the DRC 7 issued by central authorities. So court held that there is no fault of state Telangana state because they did not know that on same matter another DRC 7 is already issued by center. But nevertheless, parallel proceedings cannot go on. So once central authorities have issued DRC 7, on same issue, state authorities cannot issue DRC 7 again. I think that is a very, very important relief to the assessees because in a lot of cases we have seen that parallel proceedings keep running on for years and years and years. So assessee finishes that issue in a particular before a particular authority, then another authority raises that issue, that is closed, another authority raises that issue. So that kind of issue is going in a lot of cases under GST. So these kind of judgments are expected to provide a lot of relief in these kind of duplicate and parallel proceedings. Then next is Eicher Motors Limited, given by Madras High Court. So this judgment basically held that if the amount is, so at the time of filing of GST or 3B, if any amount is deposited in the e-cash ledger, even if it is not, so we will take an example that 20th, so we are in July. So let us talk about June return. So 20th July is the due date to file return. So let us say on 20th July, the assessee paid the amount in electronic cash ledger, but the return was actually filed and the set of entry was made on 23rd July. So in that case, department used to demand interest for 3 days, saying that only when the liability is set off, we consider the payment of tax, and in this case, we will demand the interest for 3 days. So Eicher Motors judgment held that if the amount is deposited in the cash ledger, then interest cannot be demanded. So after that, the department has also added a proviso in Rule 88B on the same ground that interest will not be applicable on delayed filing if the amount debited from cash ledger was available in the cash ledger from the due date of filing the return. So again, whenever the law provides a relief, they always find a way to curtail that relief. So what they have said is only when the amount in cash ledger is available on the due date, only in that case interest will not be applicable. So now let us take a situation. 20th July is the due date for filing return. Assessee deposits the amount in e-cash ledger on 22nd July and files the return, sets off the liability on 25th July. So in that case, as per this rule, since the amount was not deposited on the due date of 20th, interest will be applicable for complete 5 days, from 20th to 25th. So that relief from, ideally it should be applicable from 20th to 22, when the cash, the amount was actually deposited in the cash ledger. But as per this proviso, the interest will be applicable on complete 5 days. So in that case, I believe we can again refer back to the judgment of Eicher Motors. If we are stuck in any such cases where the benefit of proviso is not available, then we can refer back to the judgment of Eicher Motors and say that interest is only payable from the due date till the date amount is deposited in the e-cash ledger. I think the mic of some participant is on. I would request them to put them on mute.
Yeah. Participant, please mute yourself.
Next judgment
Aryan,
is,
yeah,
please, Ganesh.
yeah, this 1 or 2%, I think.
So next
Arun,
judgment is
yeah, please, sir.
next judgment is Cotton Corporation of India, given by Andhra Pradesh High Court. So I think, and this judgment highlights the beauty of law. So a lot of times we go into merits of the case. The tax demand is payable. These are the merits ground. This is not fraud. But sometimes very basic, very simple grounds also wins the case. So in this case, the assessee was issued a show cause notice for financial year 2021 on 30th November 2024. So what the assessee took a ground, and that was accepted by the High Court, that the last date for filing annual return for financial year 2021 was 28th February 2022. The due date to issue order becomes 28th February 2025, which is 3 years from due date of annual return under section 73. And the due date to issue SCN is 3 months before the date of order. So all the assessees, including me as well, all the professionals, what we interpreted was that the due date of order is February 2025 and 3 months before February 2025 is November 2025. So up to 30th November, department can issue the show cause notice. But in this judgment, very beautifully assessee put this ground that when we talk about month, when we talk about in terms of month, that 1 month, 2 months, 3 months, so we have to take corresponding date of that subsequent or the precedent month. So in this case, the due date to issue order was 28th February 2025 for issuance of order. So when we say that the due date for issuance of show cause notice is 3 months before the date of order, so we have to take the date of 28th February only. So we have to take 20th February and we have to come back 3 months. So that is 28th January, 28th December, 28th November. So the due date to issue SCN is 28th November. It is not 30th November. So although show cause notices issued on 29th November and 30th November, they are time barred if the show cause notice is issued on those two particular dates or even after that date. So I think a lot many cases are going to be hit by such interpretation, because in a lot of cases we have seen that the department has issued notices on 29th and 30th November, those being the last date, very high pressure dates. In a lot of cases, show cause notices has been issued on those dates. So even in any such kind of cases, these are also the points which the assessee has to check. So it's not just technical points, it's not just merit points. These kind of points also has to be checked, because in a lot of cases you might not win on merits, but you might win on these kind of grounds. So that is something which every professional should keep in mind. I think same position is there for 1819 also, because for 1819 the last date to pass order was 30th April. So corresponding date, last date to issue SCN becomes 30th January. But in a lot of cases, the department has also issued notices on 31st January. So we also have prima facie, these two are the years, 2021 and 1819, but we also have to check in all the cases whether these kind of provisions will apply. In your particular case, you should always check. Then next judgment is Patna High Court, Lord Vishnu Construction. So then this judgment has been given by a lot of high courts now, that if the show cause notice and the orders has been placed in additional notices and order tab in the GST portal, then and they have become time barred, then the assessee can go to High Court and they can get a relief, because putting the notice under additional notices and orders tab does not amount to communication. They has to be put in main notices and order section on the GST portal. Then again, a very important judgment given by Supreme Court in Aberdeen Technologies. So they have said that, so in this case, what happened is the assessee did not file GST1 properly. Because of that, the ITC of its recipient got disallowed. And after the amendment, timeline of GST1 also went by. So that September, October of next financial year, that timeline also went by. So the assessee was not able to amend its GST1. So in this case, the Honorable Supreme Court held that this is only a procedural requirement, filing returns. So because of any procedural requirement, procedural error, the ITC should not be denied. So in these kind of cases, the system has to allow the assessee to rectify their bona fide errors in GSTL1, and because of that, the ITC should not be denied. I think it followed the landmark judgment of Bharti et al., wherein also they held that rectification of 3B can be allowed for genuine reasons. So in any kind of genuine issues where any genuine mistakes have been made in GSTL1 or GSTL3B or in IMS also, I think these we can take reference of these judgments and we can approach the courts to grant us that relief. So there will be no automatic relief by the department. The assessor will still have to approach the court to get these kind of relief.
Okay.
Then,
Sir,
yes.
can we take a pause and go back to the queries, because it is 4:12 and 4:15, or we can go up to 4:20. So we can go to the query, sir. Your view, sir, on this.
Okay, so I think we can, because the judgments are endless. So I think we can wrap up the judgments. I think
Yeah.
I will share this PPT. So even the judgments which I have not discussed, they are given in the PPT. So the participants can refer PPT and we can take up the queries.
Okay, thank you, sir. So we'll go to the queries those who have raised their hand. Then we'll come back to the query posted in the chat box. So Lenin Abrahamin sir has raised a query. Sir, you can ask your query, sir.
Yes,
Lenin,
Mr.
sir. You can unmute, sir. You can unmute. Okay, so I will move to the next Manjul Mishra. Sir, please ask your query. Yeah.
So my question is, I mean, at the time of GST implementation, there was a, there was a clear distinction whether whether the particular assessee would be go to the central jurisdiction or state jurisdiction, depending upon the range on the turnover of the particular assessee. So how or can the both state and state issue the notice to the assessee?
That is a very, very good question, Manjulji. So, even though administratively they decided that every assessor will be allocated to center or state, but if you see Section 5 and Section 6 of CGST Act, which talks about cross empowerment, cross jurisdiction, so that section only says that if a subject matter is picked by one authority under center, it cannot be picked by state and vice versa. So GST Council was supposed to issue a circular wherein that circular was supposed to say that the assessee to which assessee whether it is administratively allocated to center or to state, only they can take up the assessee, except in the case of intelligence based action. So like DGJ authority, that will always have universal power. So they were supposed to issue that circular, but due to some issues, that circular got held back. So that happened way back in 2019. So we also got to know because those were there in minutes of the meeting of GST Council. So due to some issue, that circular was held back and that has not been issued till date. So legally speaking, the only restriction in law is that once a subject matter has been taken care by one authority, another authority cannot take up that subject matter again. So legally, there is no restriction on center even if the assessee is allocated to state or vice versa.
One more question is there. I mean, the section 16 says, I mean, it's not related to this case study, but it's a general question. So section 16 eligibility of input says that you can take the input. There is a certain condition. In one of the conditions, tax must be paid by the recipient or the supplier. So my question is, tax has to be paid by the 3B only. How would I know whether my supplier has paid the tax or not? I mean, he must have filed the return, but I cannot know now whether he has paid the correct tax or not. And there is no.
That's why we have this judgment of RT Infotech, where that comes into picture. So RT Infotech judgment has clearly held that once the recipient has made tax payment to the supplier, then that is the responsibility of the supplier. Recipient can avail the ITC. So we also have another judgment of McLeod Russia in this case, and very, very important judgment of Arise India and on-cost merchandising in context of Delhi VAT. So we can take help of all those judgment and say once I have paid tax to my supplier, I am not responsible anymore. So I should be eligible to take ITC.
And there was a latest judgment, Suncraft, I think, I'm not sure name of the case, Suncraft judgment.
Suncraft was on the point that if the credit is not coming in 2A, then the assessor is still eligible for ITC.
So that again, so the Suncraft judgment is eligible, or now, so, it's mandatory to match your input from 2B or 2A. So there is no relevance nowadays for the Suncraft judgment.
So Manjuji, see, Suncraft judgment was given in the context of pre-amended provision. So when Suncraft judgment came, section 16(2) AA was not in picture. Section 16(2) AA, which talks about this 2B matching, that has been introduced from 2022 onwards. I think for pre-2022, we can refer to the judgment of Suncraft, but post-2022, it will be very difficult because now there is a specific provision in the statute itself.
And can you please name any of the judgment which is in favor of the assessee for cancellation of retrospective RC of vendor?
So cancellation, there are a lot of judgments, Manjuji. You can connect with me offline. I'll let you know the names. There are 2-3 judgments on that point.
Thank
Okay.
you. Thank you.
So
Thank you.
yeah, we'll go to the next query. Meenakshi ji, Ajay, her query was already left out earlier. Because of bogus outward supply, if a recipient who is innocent has availed ITC, how he can prove himself and avoid penalties?
See, if there is a bogus invoice, then the assessee cannot be innocent. Because if there is a genuine supply and assessee has availed, then only the assessee is innocent. But if there is a bogus supply, assessee cannot say that I availed the ITC by mistake. So first point is always factually you have to prove that whether there is any actual supply or not. So if the assessee has actually received the goods, then he can very well defend that he has actually received the goods. That is not a bogus invoice, and the ITC should not be allowed. ITC should not be disallowed.
Okay. Next query is from Naz. For one of my client whose GST was suspended for some days, when checked their 2B, some bills not came in which are available in 2A. On detailed analysis, it is noted that it was for suspension period. Can I claim input? If not, I should reverse the 3B through 3B. 2B not contain these bill even though they are filed within stipulated period.
So these kind of kind of issues are coming in 2B. We have also seen some cases wherein invoices are coming in 2A but not coming in 2B even in subsequent months. So in my view, since the invoice is reflecting in your 2A, so you are eligible for ITC. Practically, first you should raise a grievance to the GST portal. If due to that grievance the issue is resolved, then you can very well avail ITC. If that grievance is not resolved, then avail the ITC and write a letter to the GST department, so that any allegation of fraud cannot be made by the department.
Okay. Next query from Balaram sir. Club and its member are considered as same entity. Whether the same principle can be used for firm and partner in case of remuneration paid to partners?
Balaramji, if it is a partnership firm, you can take the same argument. But if it is a LLP, because LLP is considered a separate entity, so for LLP that argument will be difficult. But on the larger issue of remuneration, even my view is that partner remuneration is not at all taxable under GST, because that is in the nature of salary only, or effectively that is drawings. So even if it is in the name of salary, it is drawings of profit by partner. So whether it is a partnership, whether it is LLP, partner remuneration should be outside GST law.
Yes. Then query from Rajesh ji. That is the Kerala High Court judgment a good case law, as no discussion is made regarding the GST Council meeting in which this amendment was proposed? What were the reason for this amendment proposal? Also, no discussion made regarding the non-mention of the word to TO2 in supply from 1/7/2017.
So, Rajesh, if you ask my personal view, on these ground, the judgment is not a problem because they discussed the final amendment which was made by GST Council. But the larger ground taken by the High Court. That definition has to be mentioned in the Constitution. That ground in itself is a bit problematic because we have a very long history as regard to goods. That 46th constitutional amendment, that all was regarding goods. But when we talk about services, when we talk about supply, there is no constitutional history. So court applying the logic that for these terms also the definition has to be given in constitution. That logic itself seems a bit problematic to me. So that is why I am not very keen on taking this judgment on face value. So I think it is better to wait for Supreme Court judgment because they are definitely going to go into much more detail because concept of mutuality is a very nuanced and complex subject. So once the Supreme Court judgments come, only then this controversy will be put to rest.
Okay. Next query from Pramod sir again. Is RT Infotech judgment is still valid even after introduction of 37A? Rule
Uh,
37.
uh, so 37A is effectively introduced under section 16(2)(c) only. So considering 16(2)(c), RT Infotech has given the judgment. And again, similar principle, similar provisions were there in Delhi VAT also. For that, we have Arise India and on-course merchandising. So Rule 37A will not have any impact.
Okay. Next query is from Meenakshi. Suppose in case we have accepted the SCN and we have received the order, now we can quote Messrs. Cotton Corporation of India versus Union of India case law in our ground of appeal. Will the same be tenable?
What ground? What exactly? What ground do you want to take, Meenakshi ji?
Meenakshi ji, are you available? Okay, so we'll move to the next query from Manish ji. Please share any judgment that no reversal of ITC required due to failure to make payment as per 180 days rule if supplier issued financial credit note without GST credit note.
So for that, sir, we have the appellate authority advance ruling in the case of MRF, as well as some clarification in pre-GST regime, but in GST there is the appellate triple AR of MRF that you can refer.
Okay. Okay, Meenakshi ji is clarifying that her query previously asked was regarding the time limit of issuance of notice. That
So,
Cotton Corporation.
I mean, actually, it is going to be a bit tricky. So, see, when you have replying, if you are replying to show cause notice, if in that reply you have taken that ground, then you can very well take that ground up to all the levels. But if you have not taken that ground in reply to SCN, then that is going to be a bit difficult. Then that falls on the discretion of the tribunal or the High Court, whether they will accept that ground or not. That is why, as good practice, we recommend all the professionals that whenever you are preparing reply to show cause notice, so don't think that that is only a reply to show cause notice. Think of that as your last chance to take all the grounds, all the possible grounds which you can take up to Supreme Court. So if you take all the possible ground in HCN itself, your future litigation also becomes much easier if you want to go to tribunal or High Court or Supreme Court. That is the importance of reply to show cause notice.
Okay, so we are done with the chat queries also. And okay. Okay, so we can okay. Thank you so much, audience, for attending the webinar and being so interactive, asking questions and making this webinar so live. Thank you so much. Thank you, Mohit Gupta, sir, for addressing the query, the participants, and throwing light on some of the judgments, very important judgments. Nicely explained. Thank you so much, sir.
Thank you, Ganeshan ji, for organizing this whole thing because without online tax update, all of us would not have been together at this time at this on this platform. And the biggest thank you is always for the participants who takes out time from their schedule and come to attend the session. And I think some participant was also asking for the contact details. So I have typed my number in the chat box. I will also, I think I can dictate it also if any participant wants to connect with me offline. So my contact number is 9717 58 7750. I'll repeat it once again. 9717 58 7750. So anyone who wants to connect with me offline, they can contact me on this number. Thank you so much again to
Yeah.
Online Tax Update and all the participants.
Thank you. Thank
Thank
you
you
so
so
much.
much. Thank you very much.
Thank you, ma'am.